Welcome to Earnings Central. In this video, we'll break down Stryker's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $6.36 billion. The company actually reported revenue of $6.44 billion, surpassing expectations by 1.3%. This quarterly revenue also marked a 10.7% increase compared to the $5.82 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was $3.87. The company actually reported an EPS of $4.01, exceeding expectations by 3.6%. This result also reflects a 15.9% increase compared to the $3.46 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First up, Stryker delivered impressive margin expansion, with operating margin increasing by 200 basis points in Q4 2024 compared to the previous year. This shows the company is executing well on its efficiency initiatives and maintaining strong pricing power in the market. The international business had a solid year, posting 8.8% growth in 2024. This was driven by strong performances in Canada, emerging markets, and Europe, showing Stryker's global expansion strategy is paying off. Looking at the capital equipment side, Stryker enters 2025 with a robust order book. Hospital capital expenditure budgets remain healthy, and demand for their medical equipment, instruments, and endoscopy products continues to be strong. On the profitability front, gross margin saw a significant improvement, up 140 basis points compared to Q4 2023. This was achieved through positive pricing, manufacturing improvements, and favorable product mix. The company was also active on the M&A front, completing 7 acquisitions in 2024. What's particularly impressive is that all of these acquisitions are performing at or above their deal models, which is unusual even by Stryker standards. In terms of innovation investment, R&D spending came in at 5.3% of sales. While this is slightly lower than the previous year, management emphasized their commitment to maintaining R&D investment between 6 to 7% of sales going forward to drive future growth. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The biggest news is Stryker's decision to sell its spinal implants business to VB Brothers. This move allows Stryker to focus on faster-growing areas while maintaining its enabling technologies for spine procedures through partnerships. The deal is expected to close in the first half of 2025. Another major strategic move is the pending acquisition of Inari Medical, expected to close by the end of February. This positions Stryker as a leader in the fast-growing mechanical thrombectomy market, with Inari bringing strong growth and impressive 85% gross margins to the table. The medical division continues to be a standout performer, with management expecting another year of double-digit growth in 2025. This division, which includes emergency care, Sage products, and acute care solutions, is described as the most underappreciated part of Stryker's portfolio. In the ambulatory surgery center, ASC, space, Stryker hit new records for hip and knee procedures, with 17% of knee procedures and 14% of hip procedures now being performed in ASCs. Management sees this trend continuing with steady growth as more ASCs are built. The company also announced the limited release of its Mako robotic platform for shoulder procedures, following successful first cases in December. While 2025 will be focused on careful clinical experience gathering, a full launch is planned for Q1 2026. Finally, management emphasized that international markets remain a major opportunity for growth, both for legacy businesses and recent acquisitions. For example, Inari currently only generates about 7% of its sales internationally, presenting a significant expansion opportunity under Stryker's ownership. That wraps up our recap of Stryker's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.